Actually, I think it's a pretty clever move. I mean, the Bank of Japan has been trying to, to manage the yen. They've been trying to support the currency for some time. They have intervened time and again, and every time they intervene, dollar yen just ended up going higher afterwards. So it wasn't a particularly successful intervention story. So moving in together with the Americans is a much, much smarter move. And it's much more likely to have some success in it so far as that it may well serve to draw a limit to the upside in dollar yen. It's not going to change the fact that the yen is a weak currency, but it might be more successful. And it's a very, very strong signal to the market, particularly because it seems to be the case that there might be further intervention if need be.
Investors were heavily positioned, though, for a weaker yen before the intervention. It may be early to tell, but how much of the move we're seeing, in your view, is about a policy shift versus maybe an unwind in positioning?
We'll have to wait about a week until we get some data on this, but I suspect strongly that quite a few of these positions have been wiped out. And that is a good thing because it's a clear signal to investors that speculating against the yen is no longer going to be sort of a free lunch, as it were. I mean, we have been having these problems that investors have been speculating heavily against the currency, and maybe this move will at least curtail this happening in the future.
One of the interesting mechanics here of this potential intervention have been reports that the U.S. Treasury used euros rather than dollars to fund its purchases. Talk to us about that.
Yeah. Well, it's a very unusual, certainly unexpected. I wonder whether they called the ECB to at least let them know, a courtesy call that this was going to happen. So yeah, a bit unusual. There's a lot of speculation about why they might have done this. And I think the current consensus seems to be that they didn't want to open the Pandora's box of the strong dollar policy. So by intervening in euro yen, they circumvented having to use, to sell dollars, which again, may have raised questions about the official strong dollar policy that U.S. governments have held for decades. So maybe that's why they did this. That's I think, the most logical explanation. We'll see if they have to intervene again, whether they stick to that, and if they do, what the ECB might have to say about that as well.
And what about the Fed? I mean, we have Chair Kevin Warsh signaling a different approach to Fed communication with less forward guidance. And we have the New York Times reporting that it may even be, I think, 6 times a year. And how is that going to change the way fixed income investors think about risk more broadly?
I think Kevin Warsh is a big challenge for the bond market right now. He's very different than his predecessors, I should say. He obviously has plans with the Fed. There's all these working groups that are active, trying to change certain things about the way that the Fed does business. Then there's the talk about less meetings. He is a bit of a closed book when it comes to communicating with the market. It's very different, and I think people are sort of not sure how to read the Fed, and that ultimately creates more volatility, I think, because it leaves much more room to, for speculation. And given the fact that there's so much political pressure on the Fed from the White House, I think personally, I'm not sure if this is the right moment to sort of, scale down the communication with the market, because that could be interpreted as something rather unfavorable. So more volatility, more uncertainty, I think, and maybe over time we'll get to know Kevin Warsh better, and you can read him better. But for now, it's a bit of a black box.
Sonja, a lot of folks are trying to get their handle on underlying inflation out there in the marketplace. Today's a day where we've got oil down 5-6% here, but it could just as easily be up 5-6% given the social media activity out there. What's your view of kind of underlying inflation out there in the marketplace?
Well, I think, ever since the Strait of Hormuz was effectively closed with the beginning of the war, what we are basically witnessing is this big wave of inflation that every day it just gets a little bit taller and it builds up a little bit further, right? And so that is still happening, even if the oil price goes down temporarily, even after we had the MOU and there was some ship traffic going through the Strait of Hormuz. Ultimately, the factors that are pushing inflation higher are still very much in place. And it is, of course, predominantly energy. But the longer this is going on, the more you're going to have other effects. I mean, the best example, I think, is food prices. I mean, food is expensive energy-wise to store, to cool, to transport. We're going to see that effect. Then we have, of course, the issue with wheat prices being higher because of what's happening in the Ukraine. So there are a lot of inflation factors still in the pipeline, as it were. And those aren't going to disappear just because the oil price falls by 5 or 6%, or because we maybe get a resolution in Iran, potentially. We'll see. That's still very much in place. I think that's what central banks really need to focus on.
Between Fed policy, Sonja, and coordinated FX invention, throw in geopolitics there and maybe even oil, what do you think is the biggest macro risk that markets are underestimating at the moment?
Well, I think, risk, that could be a negative, or if we think about forecasting a positive event. But I think on the downside, I think the big unknown and the big risk is probably the question of when we will get physical shortages of goods, including potentially oil. I mean, one of the reasons why we've fared so reasonably well for the last 5 months, despite what's happening in Iran, is the fact that strategic reserves have been drawn down. But that is not that will end at some point. At some point, you cannot draw down strategic reserves more. Some countries like the US or China still have a lot, other countries have less. So this is, I think, a major risk. And I think when I look at how the market is behaving in this environment, the equity market, the DAX just posted a new record high. Clearly, this is a risk that I think is heavily underpriced in the market.